All right, we are live. Good morning, good afternoon, or good evening, depending where you are this time of the day. But welcome to the trading panel where we assemble a diverse group of traders to talk about all things markets. And as you can see on the screen, we've got two fantastic guests, along with, of course, Jason, the mastermind of the trading panel. G'day, Jason.
Hey, how are you? Which Jason?
Yeah.
Oh, yeah.
Hopefully that's the other Jason. Otherwise, we're all in trouble.
Should we say Jason 1 and Jason 2?
Sure. You know, whatever. But the Jason who's always here too much. So, yeah. So Andrew, you know, as always, it's been a fun project we've been doing. I can't thank Andrew enough for kind of putting this all together with me and us just putting this on. It's been a blast, and today I'm really excited to have two really great traders with us. Jeff, I've known for years. We're going to start with Jeff Hirsh, and then we're running to Jason Shapiro after that. Jason's also been on my channel before. Had a great interview with him. Always was interested in talking with him again. So starting with Jeff, because Jeff's going to leave a little bit early. So Jeff, you know, my great uncle was a subscriber of Jeff's. So that's actually how I found Stock Traders Almanac. So after looking at that all these years, I got to finally talk to Jeff recently. He's come on today. So how are you doing today, Jeff?
Good. A little pollen allergy in the as the spring is springing here in the New York area, but other than that, I'm holding up.
Nice. So let's hop into it because we don't have a ton of time with you. And so let's talk about the seasonality. So something that you brought up that'd be really fun to talk about here, which is you mentioned, you know, almost every single election year is very bullish. So what are you looking at when you see something like that? When you're dicing through the data and you're kind of putting that together, what exactly do you do to look at that, put that together, and then move it to today? And how do you trade it today?
Well, I mean, you know, history is the past is our guide to the future, but it's not always the same. It rhymes, it doesn't repeat. But what we're seeing right here is, you know, the current cycle, the current full 4-year cycle, tracking very closely to historical patterns. We had a classic midterm low, midterm bottom in October in 22. We had a superb pre-election year, very strong, finished at the high of the year, just like, you know, the action that we see normally. So it doesn't always track this closely, but right now it is. We've got a sitting president running, and the year is where you have the S&P up 12.8% when a sitting president runs versus down 1.5% when it's an open field. And you've got this year tracking very closely and above those averages. So, you know, you kind of correlate the present with the past, and it's looking like it's pretty solid here. We've got, you know, additional, you know, data that we look at. It's not just seasonals and cycles from my vantage point. We look at fundamentals, technical sentiment, macro trends, GDP. I'm just looking over here at the Fed, you know, announcement that just came out. No surprise, no cut. They upped their outlook for GDP. We track the Atlanta Fed's GDP now, so you have, you know, solid employment situation, resilient economic activity, technical patterns, you know, continuing to strive. I mean, sentiment's a little bit frothy up at those levels that we start thinking concerned at as we're coming to the end of our best 6 months in April. So we're starting to shift our mindset to getting ready to be a little bit more defensive. We've been long in our tactical seasonal trades since October, so we're pretty pleased there. And then you look at, excuse me, some of the election year stuff that you're asking about. You know, the first 5 months of election years do better when the incumbent party wins. We're doing pretty well here. I know there's a lot of ideological and sort of policy, political stuff going on out there. I try to stay away from that when it comes to market outlooks, because the market looks at the decision of an election, the certainty, the uncertainty, and what we have now is, you know, we know who the candidates pretty much are going to be. That removes a lot of the uncertainty. This time around, we have some familiarity with what both gentlemen or both candidates will be doing, and we see some sort of flat period, usually during the worst 6 months of the year, May through October. Additionally, the same thing happens in election years as we get into that, you know, campaign period. But you know, when we get a decision in November, market gets happy whether the guy's ousted or reelected. Wall Street says, all right, we're done. We got through it. Unlike 2000, when we had the undecided election and some of those other years where there's been some uncertainty, like 2008, where we had the only 2 losses in the last 7 months of election year. So I'm getting ready to get defensive in April a little bit, not go away, but reposition in May, tighten up some stops, get rid of some losers, hang on to our winners, of course, and position ourselves for getting ready for the end of the election year, where there's usually a rally at year end.
Excuse me. And Jeff and I talked the last time about a funny one that I had, which was in 2020, and this kind of tells you what usually happens during the election cycle. So 2020, it was Biden and Trump. If Biden wins, it was going to be the end of the world. If Trump wins, it was going to be the end of the world. Hedge funds were getting short like crazy. Everybody was freaking out. It was like the end of the world for everybody. I got invited to a party with some friends. Basically, they were talking about ways to get out of the country, like if once the election happens and all this stuff. I mean, it was like just everybody had so much fear in the time. Then the election happens, the market skyrockets after that, never looks back, And this is kind of what usually happens around those election times anyways. We'll probably see some chop beforehand. That's completely normal, but, people fearing the election and who gets in and stuff, it's ridiculous. And it happens so much. Andrew, do you got any questions for Jeff?
No, I'm just happy to sit here and listen to all the knowledge you're sharing. So thanks, Jeff.
How about I throw out a couple of sector trades? Just since we do other things, since I'm just whatever's coming through the brain. I want to talk about inflation and some projections there as well. So, couple of trades I made. We do seasonal sector work as well. Copper, it's been spoken about. I got in on a little dip back in February along with natural gas, the COPX, and the FCG. So a couple of seasonal trades set up technically for us. And then one of the worst 6 months trades that we like is the utilities. So I picked up some XLU. Hasn't moved much yet, but that's a little trade that we're looking at moving forward. So just a couple of sector ideas. And then there's this inflation projection that we've been putting out there, which I posted up on the blog and Twitter and such over the last day or so. The CPI came out, was it last week, right? About just a little bit above expectations, 0.4, I think it was month over month, but the headline number was a little bit higher. And a couple of weeks before that, we had the PCE number out there, which, again, the headline PCE index, the personal consumption expenditure index that the Fed tracks. If you look at the Fed database, the St. Louis Fed, and listen to notes, that's the one the Fed watches, though people talk about other things, and it's not getting down to their 2% level, which is obviously one of the reasons. The headline here, inflation's eased, but it still remains elevated. My wife says to me the other day, when are prices going to go down to the supermarket? Well, they're not. They're just going to stop going up as much, or at least slow down increasing, which is what inflation is. But our projection is, if anything less than 0.1 month over month for the PCE, you're not going to get to 2%. So everyone's expecting some cut sooner than mid-year because they don't want to. The Fed doesn't want to seem political. I'm not buying it. I think they're really looking at the data. Excuse me. And with GDP above 2%, unemployment where it is, the market moving ahead nicely, technically pretty strong. I know we're getting against some resistance and sentiments up there, but there's no need to cut. It's digested. And these rates are historically average. Just because it's up from 0 to 5, in the last year, that's anything. So we're not expecting anything from the Fed. And the Fed moves very slowly. The only time they move quickly is when there's a crisis. And I don't see one right here. We've already got 2 wars going on. And it's still not a crisis situation here for the economy and the market. So the Fed's not going to cut anytime soon. The market might get a little bit, worried about that, or at least anxious about that over the next couple months. We can see some flat weakness and consolidation. So those are some of the things we're looking at right now.
No, perfect, Jeff. And thank you so much for taking the time. I know you're in the middle of kind of a busy day, and thanks for fitting us in for a little bit. Much appreciated. Where can people find you, Jeff, so they can check your stuff out, buy a copy of the Stock Traders Almanac?
Yeah, I mean, you can buy a copy of the Almanac wherever books are sold. If you want to get one for free, come take out a subscription at the stocktradersalmanac.com. We get one. If you really want to buy it from us, give us a call or shoot us a note. I'm not really in the business of selling single books right now, but also at Almanac Trader on Twitter. And you can just Google Stock Traders Almanac and we should pop up. So yeah, just get yourselves a little ready for the end of the best 6 months in April with how far the market's come and where we are and some of the technical resistance stuff and that sort of thing. And maybe, take a little bit off the top, let your winners ride, sell some underperformers, losers, and put on a little defense for the next, few months, May through July, August, whatever. And that's it. Good day, mates.
Thanks for coming on, man. Take it easy, Jeff.
Andrew. Jason, good luck with
awesome.
them, all right?
You too, brother.
We'll come back soon.
All right, man.
Greg's app makes it ridiculously easy to frame your favorite.
So, Jason, I getting into Fed Day today. I'm sure that's what everybody's kind of paying attention to. Do you pay much attention to the Fed and the releases and the statements or any of that stuff?
Yeah, I pay attention. Got to pay attention to something, so I pay attention.
Yeah. Do you make any of your trading decisions based on it?
I will make trading decisions based on this, depending on, what trades I have to be set up and how those things react to the news, how those things react to the news versus what the expectation of the news were, that type of thing.
Like technically, I know you have the you mainly trade off the COT reports, but you also have your entries and exits are based on news failure events. So basically today could be a news failure event that could happen in one direction or another based on probably a bunch of different sectors, a bunch of different commodities, bonds, and so on.
I need the trade to be set up first, which I don't really have anything set up at the moment. But then, yes, what would the news failure be?
I don't know.
Right.
Yeah.
I don't either. They did as expected.
Mm-hmm.
So what does that mean?
To me, the only thing I could see is
what should the market do based on that, and therefore, what would be a news failure? That's the question. I would expect the stock market should be up based on that. One interesting one to me here is the bond market's actually down now. After going up first. You could call the bond market, the 30-year bond market in particular, a news failure today. If I were set up to short bonds here and the bonds were to close down today, which is still up in the air, but it looks like they could, I would be shorting bonds here.
No, I completely agree.
Which fundamentally, I think is the trade anyway, but.
Yeah, it's really set up. I mean, and if you look at the primary trends for bonds, that's in a downtrend. It's basically set up as good as it gets. I think the big surprise, right now for people in the Fed would be them to just say they're not cutting rates. We're not cutting rates anytime soon would be the biggest surprise to the market right now, because it seems like the market's trading like everybody's believing that all of these cuts that were going to happen at the beginning of the year could still happen.
I think, and I am no expert at predicting the future, unfortunately. And I am also not an economist, a trained economist. But if you ask me, I think it's insane, quite frankly, to believe that the Fed is cutting rates as of today, the 20th of March. I think it's insane to think that the Fed is cutting rates. If you had gone to sleep 5 years ago and woke up today and looked at the last 6 months of economic numbers, GDP, employment, CPI, and you didn't know anything else about anything else, right? The only question you would be asking is, when is the next Fed rate hike and how much is it going to be? That's the only question you'd be asking. If you didn't know about the election year crap and you didn't know about whatever, where we've come from since the pandemic and all that crap, right? The only question you would be asking, looking at the numbers to me, is when are they going to be raising, and by how much? So personally, I think that the whole idea is completely insane. And forget about what I think. look at what the markets are doing. The markets are clearly saying to me that interest rates are too low. What would the markets do if interest rates were too low? Let's ask ourselves that. We don't know if they are too low or too high, but if interest rates were too low, what would the markets do? And I think it's clear that if interest rates were too low, assets would be moonshotting, right? Gold, silver, stocks, anything would be moonshotting, right? And that's exactly what we've got. We've got basically every stock market in the world, other than China, okay, on all-time highs, right? You've got gold on all-time highs, right? So the market, to me, is clearly saying interest rates are too low. And my theory, and I don't necessarily trade off this because I trade a process, but my macro theory has been this. And my macro theory is that the market is going to force the Fed's hand, right? And a lot of people say the market's going to force the Fed's hand because the commercial real estate thing is going to blow up the banks, and that's going to force the Fed's hand that they're going to have to cut rates. I see it the other way. I see it as interest rates are too low, and the market is going to force the Fed's hand by going straight the freak up. Okay. And you get to June, which is the next chance they have to cut rates, so to speak, right? And gold is at 3,000. You know what I mean? And the S&P is at 6,000, right? Then let's see them cut rates into that. That would be the most ridiculous thing in the history of freaking, economics, right? I can't see it. I can't see it. And I think the Fed, the markets are going to force the hand. I mean, look at what gold did just on this little bit of news today, right? It's coming off now, but it shot straight up out of the gate, right? As did silver, as did stocks, right? So that's my belief here. That's my macro belief here. Interest rates are too low, and assets are just going to keep going up until that gets solved. You can't tell me that there's a lack of liquidity out there. You can't tell me that. You could tell me that your forecast for the future is there's going to be a lack of liquidity. Okay, I can't argue with your forecast for the future. But you can't tell me today that there's a lack of liquidity out there. With stock markets on all-time highs, gold on all-time highs, every airport full, every airline full, every restaurant full, housing prices going up every day. That's not a lack of liquidity. That's too much liquidity. So how you're cutting rates into too much liquidity, I don't have a clue. Now, maybe the CPI comes out next month and the employment report comes out next month, and those are much weaker. And okay, then we can talk about that. But as of today, I don't even understand how anybody's talking about that at all, other than this thing of recency bias. They've gone from 6 cuts this year. Now they're at 3 cuts this year. They were all so caught up last year about the coming recession that was guaranteed to happen, right? So they all got caught up in that whole idea, and they have to cut rates because the yield curve was inverted and blah blah blah, right? And they all bought into that crap, and they've dug into this idea that rates have to be cut. And this guy is not saying rates have to be cut. This guy is saying we got to see more data. Okay. Now I get it. It's an election year. Okay. We don't want to raise rates in an election year. Okay. Well, the longer you don't raise rates, to me, the more the market's going to force you to. So, we have a ton of debt that has to be serviced. So therefore we can't really raise rates because we can't afford it. The market doesn't give a shit what you can afford and not afford. If you're going to take rates, and again, I don't know if I'm right, but let's assume for a second that maybe I am. If rates are too low, right, the market doesn't give a shit about, your problems, right? If you're going to keep rates too low artificially, then asset prices are going to go up. That's just how it kind of works, right? So that's how I see it here.
No, I absolutely love that. Because I'm honestly feeling the same way. We're seeing this kind of melt up period, and people are still thinking that there's a possibility of rate cuts. And I don't know, and you've been around even longer than me, Jason, and you seeing the market, that they're pretty slow to start cutting unless something starts to happen in the market or the underlying economy or something. And I think everybody just got very interested in this idea of all these rate cuts that came out, at the end of this last year, and now they're kind of carrying it into this year. And it's like, there's no possible way when you're looking at this massive rally. I mean, gasoline, the average is over $3.50 now. If you look at all the commodities, and you're a futures trader like I am, we see all the commodities all the time. Like, they're insane. I mean, obviously cocoa is not a major driver of what the Fed's going to do in the economy, but we're seeing cocoa year to date is up over 100%. That's absolutely insane. Japan's up over 20%. Oil's up 15%. Like, all of these things are basically just rallying like crazy into the face of what people think is, supposedly high rates at the moment. And if anything, I mean, a rate hike would be more likely than a cut at the moment. I mean, it's crazy, but I completely agree with you.
I mean, like I was saying earlier, the bonds are getting hit. Okay, the bonds are on lows right now. The way I see the bond market is, like, again, if they're not going to raise rates, then the long end, look, the short end of the curve, we know they control. And the shorter, it is 2 years, 5 or whatever, the closer it is to what the Fed's going to Fed funds, right? Whereas the long end is not about that at all. The long end is its own animal because it will forecast future inflation and future growth. If they're going to keep rates too low, the long end should get crushed, right? And today, that seems to be what's happening. The long end is 30 years are the only ones that are down today after this news, right? So the market, to me, is doing what it should be doing. It's saying, you freaking people are insane. That's what it's saying. You're going to keep rates low like this. You're out of your freaking minds. You're living in a freaking dream world. All right. And again, the new data can come out and that can change things. Okay. But until that cut, we haven't seen any of that yet. Every month we see the number come out stronger than expected. All these numbers. It's like, oh, but the revisions and the next month is going to be different, and the seasonality, and then the next month it comes out and it's strong again, and then they go back into the same freaking mantra. Right. I think it's insane. I think it's insane. And I get it. I get why the Fed doesn't want to scare the world into thinking rates are going higher, because there's a lot of dangers out there if that's the case, right? With the commercial real estate shit and everything. But to me, if they had any responsibility at all, they would have raised rates today by 50 basis points. And then the long end would have gone up, because then they can forecast less inflation in the future, right? But if they're going to continue to refuse, then, like I say, the markets don't care. All right. They're going to find the truth, man. Right. And that is the truth of what they are saying now. Again, I don't know if my forecast for all this is right or wrong or whatever, but the markets are telling you as of now that that's exactly what's going on. Like I say, go back and ask yourself, what would assets do if interest rates were too low? And the answer is clearly they would be ripping higher. That's what they're doing. That's my explanation for what they're doing. Everyone's so into, the market can go up because interest rates are going to be lower. Interest rates are going to be lower. Well, interest rates bottomed at the beginning of this year, right? They've gone up all year, right? But the stock market's on new highs. So you're not going to tell me that's because of interest rates going down, because interest rates haven't gone down this year, right? I think it's because interest rates are too low. And therefore assets, you have to put your money somewhere. There's clearly a shitload of liquidity out there, and it's got to go into something if interest rates are too low. If interest rates were too high, well, then people would be piling their money into bonds and earning that high interest rate, right? But that's not what they're doing. They're putting their money into everything else.
I really like what you said there, Jason, about if the situation is X, what would we expect to see? And thinking about the scenarios in that kind of context, I think is really valuable to, no matter what type of trader or investor you are. But I just wanted to ask you about you're a contrarian trader, based on your last appearance on the Better System Trader podcast. I assume you still trade like that. How much of the discourse you were talking about, this discourse on recessions and rates, how much of that do you actually listen to versus what you see in the market to inform your decisions?
I listen to it all.
Right.
Because for me to trigger a trade, I need to sort of understand what people are thinking is bullish and bearish. So that if I were looking to short something, I need to know what people are thinking is bullish. So that when they get that bullish thing, and the market fails to rally on that, I can get short. So I listen to it all, right?
Right.
I don't trade on any of these belief systems that I have, right? I'm a tape reader, you know? So that's why I say, like what you were saying is the market is saying this. So therefore, that's the narrative I'm going to go with. People like are asking about NVIDIA and this and that. I always tell people, man, I'm 56. I can't even spell AI, dude. You know, you're going to ask me, you know, about how AI is going to change the future. Like, if you can't find somebody better than me to tell you that, then we got a lot of trouble, right? Because I don't even know what the hell it is. All right. But what I know is, as of now, you better believe the narrative that it's going to change the world and create all this productivity and all that stuff. Because if you believe that narrative, it's going to keep you from keep trying to short this shit. I know more people that have shorted NVIDIA in the last 10 months than any trade that I've ever seen. And I've made videos on YouTube saying, please stop doing that. Okay. And I'm not saying stop doing that because AI is going to take over the world, because I have no clue. Right. What I'm saying is, when a stock or any asset closes on new highs all the time, you're a moron if you short it. Okay. Like, at the very least, if something closes on all-time highs, get the frick out of your short. I get it. You want to pick the top of NVIDIA. I get it. But if it closes at a new high, you can't be short, man. I don't care what the asset is. That's rule number one, right? And yet they keep doing it. And they keep doing. Someone just asked me this morning, so when is this market going to top? I go, not until fucking the first question everybody asks me is that question. You know, why does it have to stop? Why is it all anybody wants to know? Why are people asking me, how high is this going to go? You know what I mean? No one asks that. When's it going to top? When's it going to top? I'm sure you guys get it every day too. That's all we hear. When's it going to top? When's it going to top? When you stop asking that, that's when it's going to top, right? And not before, right? So at least that's what I think. Now, we'll top ticket right here. That would be sort of normal. But, you know, I just think, you know, again, let the market dictate your narrative, not the other way around. Because that's what we're trading. We're trading the market, and trying to outthink that is where we get in trouble, right? Well, I think that, you know, AI is just a bunch of hype. Okay, great. So short NVIDIA. But if it closes on a new high, then you got to get out, man. You know, I've been hearing people tell me that for the last 500 points in NVIDIA. Are you still short it? Like, you're out of your freaking mind. Wow. You're not going to be around, you know? And truthfully, I was saying it yesterday. If you can't find a better trade than shorting NVIDIA here, or anywhere for that matter, you're in the wrong business, man. There's hundreds and hundreds and hundreds of stocks that aren't making new all-time highs. Short those. Like, why do you got to be the hero? Everybody wants to be a hero in this game, and it kills you.
I think you brought up a great point there that we could even go on a little bit more on. Everybody wants to be a hero. When you talk to new traders, you know, the thing that they say to you the most is to try to tell you, you know, when China's crashing, they're like, hey, I'm buying China here. Hey, I'm buying it here. You know, they kind of want to tell you these things. So then you're like, oh, cool. Look at you. You caught the bottom tick. And then really in reality, like, for us as traders, like, that doesn't matter. That's not how we make money. You know, most of the time it's how we lose money. Like, you know, everybody has had that time where they've scratched that itch of trying to catch bottoms or falling knives when you start trading. But really it's a game of figuring out, like, what's your methodology? A perfect bottom will never be caught. So how exactly do you catch that? And you do it better than most people. You know, your strategy being contrarian and catching these turns in the market. You know, can you go through a little bit of, like, instead of just people buying as things are crashing or trying to sell as things are just reaching all-time highs over and over again, what do you do to kind of do that? Like, how do you get confirmation? You don't have to say the whole process, but when do you enter technically to, you know, enter a trade?
So the first thing is, when you're trying to be contrarian and you're trying to pick market turns and all that, for me, you can't do it based on price. Price is a failed discounting mechanism, okay? Because you don't know the future, right? Is NVIDIA going to be the biggest company in the history of the world in 5 years? Or is it a bunch of bullshit and it's going to be down 70% in 5 years, right? I don't know, and you don't know, and nobody knows, right? So just saying that this thing has gone up a lot, therefore I'm going to short it, will kill you. That's not contrarian, right? Being contrarian price is not contrarian. It's stupid, personally. And I say that because I did it many years. Okay, for many years. Okay, I know it because I did it. All right. And what changed my life with that was instead of being contrarian price, I'm contrarian participation. So to me, it's not this thing's gone up a lot, therefore I'm going to short it. It's everybody is long this thing, therefore I'm going to start looking at shorting it. Things are moved by money in, money out, right? So if, as a ridiculous example, everyone in the world had every one of their dollars long an asset, then it could never go up because all the money is already in it. It doesn't matter what the news would be. It doesn't matter what happens. If every dollar in the world is already in it, it can't go up anymore, right? Now, that can never happen. But on a relative basis, that's what I'm looking at. Positioning. Are people way too long? Okay, now they're way too long something. So, and that's based on positioning, not price, right? So therefore, I'm going to be looking to short it. That's one. And that doesn't get me short. That gets me interested in shorting it. And that gets me short, and I would suggest anybody do this no matter how they trade, right? Is I need the market to confirm what I want to do first, right? Fighting the tape is stupid, right? The tape will tell you, man. It almost always does, right? And by that, for me, what confirmation is what we were talking about before, a news failure event, right? So this market's going up, 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 up. Okay, now everybody's super long. Why are they super long, right? Well, they're super long, and they're not super long cocoa right now, but let's say they were. They're super long cocoa. So I'm reading the cocoa news. Why? There's been storms and wherever they make cocoa, and there's a shortage of cocoa, and blah, blah, blah. So now we get a piece of, and the inventory of cocoa is on the lowest it's ever been. Okay. So now we get a piece of news on cocoa. The inventory news comes out, and it's even lower than was expected before. Well, cocoa should go up. That's what's been driving it. And cocoa goes up probably, and then fails and closes down on the day. That's where I'll short it. Right? And that's how you pick the turn. When the market confirms it. And that doesn't always work, okay? But what it gives you is good risk reward. Because as a turn picker now, if cocoa got this big reversal day on Paul, and again, cocoa is not set up, but I'm just giving it as an example, okay? If cocoa got this reversal day on big bullish news, well, there, I got the high, all right? Somebody out there, and we've all been this guy, okay, if we've been trading long enough, somebody out there waited to buy cocoa when the good news came out, okay? The most bullish news ever came out. They bought cocoa there and are out of the money right away, all right? That person should never make money because trading is not that easy, right? You're not just going to buy good news every time it comes out and sell bad news every time it comes out, and that's going to make you money. If you believe that, you have not been trading very long, all right? So that person should never make money. So if that person's never going to make money, then my short's going to work. However, if it turns and takes out that high and that person is making money, well, then I didn't pick the turn, did I? If we're on new highs, I didn't pick the turn. So I get out, I stop out. So I'll lose that 1 day of volatility, right? And that just becomes the risk reward. I lose 1 day of volatility and I can make 30 days of volatility. And that's how personally I make money over time, right? As I make 5, I lose 1, lose 1, make 5, lose 1, make 5, and let time go on, let time pass. That's how, at least for me, I make money over time. Less than 50% of my trades work. But when they work, they work very well. Knock wood. So that's how I do it. Doesn't mean that's how you have to do it. That's how I pick turns. And that has been what worked for me. But no matter what you do, maybe you're a breakout trader, you still have to wait for the confirmation, and you still have to define when that is wrong. Okay, here's the breakout. Okay, I'm in. Here's where the breakout is a failed breakout. Okay, I'm out. Next. Move on to the next one, right? They're not all going to work. And if you're going to kill yourself on 1 or 2 that don't work and lose a shitload of money, you're not going to be around long enough. So just take your loss, and ride your win. That's really what this game is. Predicting the future is what this game is not. I always say to people, man, if you think you're going to win this game by predicting the future better than the rest of the world, you're in for a long, long, long ride, man. I don't care how smart you are. You could be the smartest person in the world, and I hope you are. But you have to be smarter than everybody else combined in order to predict the future better than the market, because the market is everybody else combined, right? I don't care how smart you are, you ain't smarter than everybody combined. You're just not, right? Albert Einstein wasn't smarter than everybody combined. Okay, so you got to think about it in those terms. You got to take it from I don't know anything. All right. Like I said, I can build all these scenarios about the Fed and the interest rates and the blah and the blah and the blah, but I don't trade off any of that. It makes for great conversation. You know, I trade off what the market is telling me. And I only came up with that scenario because of what the market's telling me. You know, I didn't look at my economic forecasts and be like, oh, the Fed has to, you know, raise rates. I don't have any economic forecasts because I don't know how to forecast the future of economics or anything for that. I can't even forecast, you know, if my wife's going to be mad at me when she gets home in an hour, right? You know, although I can come up pretty close to forecasting that she will, but she may surprise me. Yeah, I didn't clean the dishes or whatever. But you know what I'm saying? Like that's people need to understand that that's what this game is. And that's all it is. It's poker. There's no way for you to know what all those other hands are. Right? You have to play odds. That's it. Right? You have to play odds over time and watch your bankroll over time. That's all this game is. It's nothing else. All this bullshit that people try and sell you about this stuff, you know, is fraudulent, quite frankly. And I went to school, man. You know what I mean? I master's degree in finance, and I learned all about all this stuff, and I get it. But it ain't going to help you because the market's a discounting mechanism. So anything you know, the market kind of knows, right? So you just have to let the market tell you what to do.
And I think that's what you said too about the smartest guys, you know, the people who think they know everything. I think it even makes it harder because then you have this belief that you're always right. And, you know, for me, you know, I'm kind of a grunt. You know, I have no problem going, hey, I'm wrong. I got to get out of this position right now. I'm wrong.
That's why you're still here.
Yeah. That's
why you're still here. You know, people say to me, I'm like, so I was in this book called Market Wizards. So people call me a market wizard. Okay. And I'm like, if I'm a market wizard, it's because I take losses better than most people. That's it. That's the only thing that I do better than other people. And the only reason I do that better than other people is because I've taken so many freaking losses in my life that I've gotten better at it. You know, I don't have a problem at all taking losses, man. You know, I screw things up sometimes in other ways, but I never screw things up on my loss taking. If I'm shorting something and it closes at a new high, I'm out, man. If I'm buying something and it closes at a new low, I'm out. No question asked. And if I buy it and it closes at a new low and I get out and the thing goes up the next day, I don't care. I don't have any regrets, right? 80% of the time, I'm going to wish I didn't stop out, okay? And 20% of the time, it's going to save me from being broke, right? So, you know, the number one rule in this game is you got to stay in the game. Otherwise, you know, you're wasting your time. People focus on this one trade. This one trade should mean nothing to you, right? This game is about over time, making returns over time, right? This particular trade should mean almost nothing to you. I can lose on my next 8 trades, and God, I pray every day that I don't, but I'm still going to be around. I could lose on my next 15 trades in a row. I'm still going to be around, and it's only going to take 2 trades to make all that back. You know, that's the game. No matter what people want to tell you, that's really what the game is. And until you get used to that idea, I think you're going to struggle over time. Not that any, you know, like you said, the problem is people get it right. That's the worst thing that can happen. You know, get these guys. I predicted the 08 crash. And here's the proof. That's great. But you were predicting it in 04, 05, 06, 07. You got it in 08, and then you're predicting it in 09, 10, 11, 12, 13, 14, 15. You've been predicting it ever since, right? So that's great that you predicted the 08 crash. But so what? I'm like, what does that get you? You see people sell that all the time, on the internet. There's a guy on CNBC I see every day. We got short Lehman Brothers, before the 08 crash, and we made 80% on the trade. That's terrific. But you're telling me that's the one and only time that you did that trade? That's a lie. Okay. And if it's true, then hey, man, I'll sign up right now. Right. You told me you got short in 08 and you got long in 09 and you've been riding long since 09 ever since. Sign me up. I'm in. Right. But there's no one that did that, because anyone that was bearish then has been bearish pretty much the whole freaking time. Right. So getting it right, can almost kill you, because then you think you have some ability to get the future right. I always say, I flip a coin, man. If I call heads and it turns heads, did I predict that it was heads? Mm-hmm. Clearly not, right? The whole concept is ridiculous, right? All I want to do is flip heads and get paid 60 cents when it's heads and pay 40 cents when it's tails. And then I'll flip all day. Let's go. Then I have an edge, and then I want to play. But for me to make money predicting if it's going to be heads or tails is just a fool's game. And maybe it comes up heads 3 times and I got it right 3 times in a row. Now am I the greatest coin flipper that ever lived? I could argue I am. Look at me. I flipped heads 5 times, called it 5 times in a row. I'm the greatest coin flipper ever. Sign up for my coin flipping site. Or, you know what I mean? But it's just not true.
Yeah.
It's just not true. You can see it with the heads tails thing that it's clearly not true. It's no different in the market, man. You know what I mean? All I ever point to with people are the things I got wrong, because I don't want people to think that I have some ability to do that, right? I want them to understand that I don't have any more ability to do that than anybody else. So I can only control what I can control, right? Taking losses, riding gains, right? Watching my risk management. I can control that. I can't control where the market's going. So I'm not going to try and control that. That's what I think. Call me crazy, but that's what I think.
Yeah, we got I was just going to say, we got a good comment in the chat here. I just wanted to share this one. Well said, Jason's. Forget the. This is from the Dave. G'day, the Dave. Forget the Furu Holy Grails, the fraudsters. Forget all the liars in their predictions and their fool's games. And there is a lot of that.
I don't want to get too personal about it, but I got into this thing after I was in that book. We had a bunch of people asking me if I could help them, right? Which I want to do. I always tell people at this age, at this point in my life, I'd like to do that. But I had so many people coming to me, I couldn't do it. I was like, I can't help 200 people at the same time, right? I have a business, I have a family. So one guy started this web page to centralize it. And because of that, and it's been fun, but because of that, I've started to learn about some of these other people out there. I never paid attention. I was never even on Twitter. I didn't know about any of these shills out there selling fucking bullshit to people. And I've come across them now and have seen them. And it kind of infuriates me a little bit. You know what I mean? People are, especially people newer to the market. Like, it makes sense. Hey, this guy's a guru. I'll just follow him, right? And they don't get it. There is no such thing as a guru when it comes to that, right? You're a guru because you know how to risk manage. That's it. That's what makes you a guru. Stanley Druckenmiller, I have a client who had money with Stanley Druckenmiller for a long time. And he always tells me that Stanley Druckenmiller, who's a very smart guy and a very well-spoken guy, on top of being an incredible money manager and trader, he said he would write up these monthly things about what he thought the market was going to do. And he said they were just beautifully written, right? And made so much sense and this and that. And they were wrong 90% of the time, right? And yet, Stanley Druckenmiller makes a ton of money, okay? And made my client a ton of money, right? Despite the fact that his monthly reports are pretty much wrong almost every month, right? That's what a trader is to me, right? So what I'm saying is even Stanley Druckenmiller, is wrong a lot, right? So if you're going to try and follow some guy because he's got some slick shit, and he comes out in the morning and gives you the morning charts and, you know what I mean, and gives you all the bullshit, all right? And bullshits this whole freaking time about, oh, here's the trade I made yesterday. I didn't tell you about it live time, but I'll tell you about it now. It's almost so easy to peg these guys. But for a lot of newer traders, it's not, because they don't know. They haven't been involved with this. So it's like, oh, yeah, this guy has a slick, big computer screen where he's showing me charts. I know charts. That sounds cool. I don't really know about them. And he's showing me these charts and these trend lines and the blah, 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 which is all a load of shit, but it sounds great to a new trader. So they fall for this shit and they lose their money, and it kind of pisses me off, quite frankly. There's not a lot I can do about it. But it's horrible, quite frankly. It reminds me of televangelists in a way, you know what I mean? Who are, and be as religious as you want, that's fine. And be whatever religion you want, that's fine. But for people to use religion, as a way to scam money out of people, to me, is like the biggest sin there is. And I'm not a religious person, okay? But you want to talk about sin, that's the biggest sin there is. It's disgusting. And that's how I view these people. They're sucking money out of them because of their lack of experience in the markets. And I find it disgusting. And I'd like to expose each and every one of them, quite frankly. I can't because I'm busy. But maybe one day when I'm retired, maybe I'll spend the whole rest of my life just exposing all these freaking frauds for what they are.
I think it's completely well said, and I think it's important that you bring that up because we all see it all the time, and for people like us who are actually in the market managing money for people and all these things, it's really hard when like you say something like, "Hey, I'm right under 50% of the time," and like they're like, "Well, there's this guy over here says he's right 90% of the time,
Exactly.
why I pay him money, and it's like
exactly
you're also like what you do, and it's what I do is kind of just show people what I'm doing. Like I don't want you to even trade like me. You're not my personality. You're not made up like me, but I can show you my discipline and what I do. And that's the best I can do. I don't think anybody paying attention to other traders and doing exactly what they're doing will make you money. You just have to figure out your own way of doing it and find a mentor like you who you can just at least go, okay, he's telling me the truth. He's not like hiding his losers from me. He's not like Xing it. Oh, all of a sudden a loser disappears from the channel. Like that happens all the time there. So I think it's well said.
Yeah, I think that you're exactly right. And like in my stuff, my newsletter, my stuff, I do put the trades that I'm doing, right? I put them beforehand. I say, look, this is set up and this is a circumstance when I'm going to do it. And then when that circumstance happens to hit, I'm on my Discord saying I'm putting this on. But I beg guys not to do that because I'm like, you're not, just like you said, you're not me. You know what I mean? There's so many reasons why that's not going to work. Okay, I've been doing this way for over 20 years. So I know what it looks like, right? And I am comfortable. You'll join my service. I'll say, do this trade. I'm doing this trade. You'll do it. You'll lose. We'll lose 1%. I'll say, here's my next trade. We'll do it. We'll lose. We'll lose another 1%. We're down 2%. Then you'll say, I don't know who this freaking guy is. I'm 0 for 2. Fuck him. Yeah. I'll say, this is my next trade. We'll do it. I'll make 6%. You won't because you didn't know if I was any good now, right? So I'm up 4%. You're down 2. So now the next one will come and you go, oh, maybe this guy does know what he's doing. So since I missed that last one, I'll double up on this one. We'll lose. Yeah. I'll lose 1%. Now I'm up 5, right? Now you're down 4. I'm up 5. You're down 4. All the same trades, right? Because you're not comfortable with what I'm doing because you don't know it. Like I developed it, so therefore I'm comfortable with it. I've been trading it for over 20 years, so I'm comfortable with it. I am comfortable with the losers. I know they come with it. I know my statistics, right? You don't know if I'm real or not. You know what I mean? So that's one reason why you shouldn't be doing that. But also, we may have different goals. I mean, obviously, all our goals is to make as much money as possible. But truthfully, that is not necessarily my goal as a money manager, right? Because I offer a service to institutional investors. And my services, yes, positive returns, or nobody's going to give me any money. But I'm doing positive returns with negative correlation to the rest of their portfolio. Being a turn picker, I'm going to have negative correlation. That's why they put me in their portfolio. You don't give a shit about negative correlation in your portfolio, most likely, right? So your goal is not necessarily my goal either. So, but what I'm trying to do, exactly what you said, is show them on my thing, like you can follow my trading, and therefore you can see the discipline that I use, right? And I talk about it all the time, right? Like, hey, man, like it's so hard for me right now to keep this discipline, but I'm keeping it. We go through those cycles, right? you can see that I'm not chasing other things. I'm sticking to what I do, no matter what the situation, right? And hopefully that is what you can learn. Trade your way, but these things go across every kind of trading. Discipline, risk management, process, no matter how you're trading. Those are the important things anyway, right? So hopefully that's what people will get out of my thing. And I say that, and then I get a bunch of people and they just copy trade me all day long. And as soon as it goes against them, they're bitching, you suck, Shapiro. Okay, you're right, I suck. But it's a funny game. It's a funny game. But yeah, you're right. 90% of my trades win. Well, why should I follow you at 40% of your winners if I could follow this guy at 90% of the winners? Well, you're going to find out. That's why. And I tell people all the time, if that's what you want, if you want someone that's going to help you turn $10,000 into $1 million in 6 months, I ain't the guy. Okay? Go to those guys. And when you blow out, if you're still interested, then come to us and hopefully I can help you learn what really matters. And we've had a number of people on our site that have come from some of these shills. And it's sad because their stories are sad. I made a first trade with this guy and I doubled my money, and ever since then I've lost it all. I thought he was great. I thought he was a genius, and ever since then I've lost. And it's sad, man, because you're fucking with people's money, man. You know what I mean? Like, this is people's retirement accounts. This is people's college educations. It's real. You know what I mean? It's real. You want to tell me that, you have the best hamburger in the world, okay? And maybe it's bullshit, and I believe it. The downside is not very good. So I eat your hamburger, and maybe it's not that great. You know what I mean? And maybe whatever, I get a stomach ache or something. That's not the worst thing in the world. But, you start... I just don't know how people do it. I may be good. I may not be good, but I can look myself in the mirror and say, I believe very strongly I'm helping people, whether it can help you or not, because it's your mind that has to be able to accept these things. And I have plenty of people that have come on here and don't listen to a word I say, right? And I watch them, quite frankly, lose money doing what they've always done, right? Been sitting here telling people for a long time, I'm not shorting stocks. I don't think shorting stocks is a good idea. I don't think and every day I'm shorting stocks here. I'm like, well, I don't know what to tell you, man. You know what I mean? And like I say, you don't have to do what I say, but think about what I'm saying. The market's closing at an all-time high every day. Why are you shorting? I know why. This is the one advantage I have. I know why, because I've been that guy. The first 10 years of my trading were exactly that. I'm no different than anybody else, right? I know what that's like. I've been there. So hopefully... But, people don't like to learn from others, I find, as I didn't like to learn from others. None of us want to listen to their dad, right? If I had listened to everything my dad said, my life would have gone a lot freaking easier, right? But I didn't, because I didn't want to listen to my dad. I wanted to rebel, and I wanted to be my own man and all that shit. And, and that's how most of us are, right? So, okay, I say you can help lead them to water, but you can't make them drink. But hopefully in time, they will get it and they will believe. And we've had certainly quite a few people who have bought in and have sent me messages saying that, hey, man, their trading has totally turned around and all that stuff. And that's really what it's all about, I think. If you can just get through to a few, then that's getting better than not getting through to any, I suppose. So
yeah,
anyway, that's my rant.
I love that. That was awesome. I think that's such a key to the development as a trader is we do need to make these mistakes ourselves, because I think that's where the conviction comes from, right? And you can see people make mistakes and go, oh, okay, that's a nice lesson, and I'll keep that in the back of my mind. But until you do that mistake yourself and you feel it in your gut and you're pissed off with yourself or whatever for a little while, and then it really sinks in and gives you that conviction, I think that's a really important part of the process. The trick is, how do you survive long enough to figure all that stuff out, right? Because it's quite easy to, especially these days with leverage, is just blow yourself up in a couple of minutes if you're not careful. So
I mean, like I say, I know I've said it 6 times on this discussion, but I put it on Twitter yesterday. I put a thing on Twitter yesterday. If you just don't be short something that closes at an all-time high, your P&L will improve immediately. So there's rule 1. Do that. Just do that, and you'll be better off. Don't be short something that's closing at an all-time high. I promise you, if you don't do that, your P&L will improve. And then you can start talking about some other things and this and that and the other thing. But just take that one thing and you'll be doing better. But you're right. You got to learn it for yourself. And people will learn that rule, very much. It's just so funny to watch. My whole thing is human nature, right? I'm a fader of mass human psychology, right? So I'm consistently listening and observing this. And, I put something the other day on Twitter. Hey, cotton. This is my favorite short out there. Now, does that mean cotton's going to go down? Not necessarily. It means hopefully it's going to go down because I'm short it. But and the most comments I got off of cotton is my favorite short here. What do you think about cocoa? I'm shorting cocoa. I'm buying puts on cocoa. I'm like, what I mean? Like you're shorting cocoa because it's gone up a lot, but you would have been shorting cocoa 50% lower because it's gone up a lot, Like, why are you shorting cocoa and why are you even talking about cocoa? I'm talking about cotton. You're talking about cocoa, right? You want to be a hero and catch the high on cocoa. That's great. But so far, everybody who's tried to do that for the last 10 months has just gotten kicked. Okay. And if you ask me, it's because the positioning's not there. I'm a little biased, but I mean, cocoa ended up on new highs again today. It was up, Jesus Christ. It was up another 300 points or something today. Am I seeing this right? 361 points in cocoa today.
Yep.
And that's on the day, by the way, from the lows, because I know at one point this morning it was down like 150 points or something, right? Things up 500 points off the low today. This is what you're shorting? Like, get the hell out of here, man. You know what I mean?
It's the hero trade.
No, cotton in the meantime is crowded. And again, it doesn't mean it's definitely going to work. Is crowded and has been weak. Wouldn't you rather short something that's going down than something that's going up? Call me crazy. I get it. I pick turns. So I am theoretically shorting things that have gone up, but not until the market confirms it. You know what I mean? I'm not just shorting because price has gone up a lot. It's the most dangerous game there is. And I'm speaking from experience. I've been there. Been there, done that. And decided at some point I don't want to lose money anymore, so I'm not going to do this anymore.
So even though, Jason and I are different traders, Jason picks turning points. I'm more of a trend trader. For me, even looking at something like cotton, like we're getting long signals. I saw you put that out and I was like, I know it's probably going to pull back because your systems are very good. And you also see crowding just like I do on the COT reports. And so we do see this pullback. However, in my time frame, it's still moving up. However, there's two different trades there. Like Jason could make that trade. It could be much more shorter term than mine. I could be riding a trend. It could be much more longer term than his. The game really, and what I've gotten from this entire conversation with Jason and what you guys should pick up too is risk management. Like risk management being the overall most important thing that you can do as a trader to make money. If you don't understand risk management or your sizing, like you're going to have some serious problems. So when you're doing like a turning point, like something like cotton, it's pretty easy to see a chart of that. Are you putting your stop kind of at those above those highs? How exactly do you risk manage when you are trying to catch a turning point like that?
Like I say, here's a piece of good news for cotton. Cotton goes up, it fails, it closes down, I get short. If it takes out that high, I get out. So I'm sizing then to my stop. I know where I'm entering. I know where I'm stopping. I know how much I want to lose per trade. And that's how I size it. And then I leave it alone. That's it. I don't add as it goes in my favor. I don't move my stop back, I don't trail my stop so that I don't give back my profits or any of that. I put my stop in because it's where it makes sense, right? These random movements of, you trail your stop so you don't give back your gains or whatever, have proved to me to cost me money over time, to make me money over time. Does it mean I could give back a winning trade? Sure, it does, and that happens. But over time, I have found that's where I maximize my profit from it. So, and it's because that's what makes sense on the chart. Here was the high that should never be breached. So that's going to be my stop. What happens in between, the whole random move of blah, blah, I personally don't have the ability. I'm not good at path, right? What I'm good is picking a turn and sitting on it. Sometimes the path is I pick the turn and the thing goes straight in my favor. Happy days. Sometimes I pick the turn and it does nothing for a while. It doesn't take out my stop, but it does nothing. And then it goes in my favor, and sometimes it just does nothing for a long, long, long time. And eventually I get out with nothing. Okay. So that's how I do it. I'm just sizing to my stop.
And so you basically put it at a technical level. Like, I know I'm just trying to explain it because everybody does stops a little bit differently. And I'm saying for you put it at a technical level where it would invalidate your trade.
That's the key, where it invalidates my trade. That's the important point, no matter how you're doing it. Like I say, you trade a breakout. Okay, trade a breakout. But where is your breakout invalidated? Because that's what you got to get out. And chances are you'll get out, and then it'll go back where you wished it went. You know what I mean? But there'll be the 20% of the time where it won't, and it will save you, and it will keep you in the game. Trade 100 breakouts, right? All you need is 15 to work to make a crap load of money, right? All you need is one, man. Trade the NVIDIA breakout at $300, man. You're crushing it. You know what I mean? So, you got to stay alive for those, even though in the meantime you get stopped at bad points sometimes. So what? So you just got to get over that. So what? It happens. It sucks. You pound the table. You say, shit, they got me again. You know what I mean? And you move on. And you take the next trade. If you have an edge, then over time it's going to work for you, but not if you're not around. I just read a book, and I don't really read trading books anymore because I don't want to get confused. But this Linda Bradford, I'm having a conversation with next week. So she sent me her book, and I was reading it, and I was sort of highlighting certain things, and like her number one rule, if I could find it. Well, I don't know. Her number one rule is you have to be alive to be in this game. And that's the damn truth. You know what I mean? That one trade that goes, whatever against you, you shorted Bitcoin at 16,000 and you wrote it to 70,000, or you added along the way, you know what I mean? Because you couldn't be wrong. You sold more at 20, more at 25, more at 30, more at 30. You're done now. You're done. You have no money left. You shorted NVIDIA at 300 and you sold more at 350, 400, 450, 500, 600, you're done. So you're not going to be around to take advantage of anything. I think people need to know that, man. They need to know it.
That's the trading.
And it hurts. It hurts. I've been there. You get into the mindset of, I've been shorting. It keeps going against me. I can't miss the short now because I've been shorting it this whole way. So I can't miss the short now. So every time there's a tick down, I short it again, right? Forget it, man. It doesn't make a freaking difference. Make money on something else. I have to make it back in this market just because that's where I lost it. Who cares? Make it back somewhere else. Your accountant doesn't give a shit where you made it, right? So you got to get over that. These are all horrible habits. And like I keep saying, I know all these horrible habits because I have lived all these horrible habits, right?
Same.
And we all have. If you're honest and you've been doing this long enough, you had to live those because those are the human nature habits that we're going to have. So if you're human, you're going to go through that, right? But you either learn from it and change, or you don't, and you go find another hobby, or you go find another way to make money. I mean, you don't have to listen to me. I'm an old cynical codger, but I'm telling you, man, that shit'll kill you. It did me, and it did a lot of people that I know. And, at some point I came to the conclusion where I was like, I got to figure something else out because this is getting me nowhere. There's a rule book to trading, and you can find the rule book. Read the Market Wizard series, and I'm not even talking about the one I was in because that was like the 5th or 6th one at that point. Read the first 2 Market Wizard books, right? There's a rule book in there, and that's what you need to follow, man. Cut losers, ride winners. Like, it's not that hard, right? Don't fight the tape. You know what I mean? Let the market confirm. I didn't make these things up, right? This is the rule book, right? Follow the rules, and you have a much better chance of being okay doing this. Break those rules, and you're going to regret it. And I didn't follow the rules. I read Market Wizards the very first day that I put on a trade, just by coincidence. I happened to be 1991, and that happened to be when that book came out. And I happened to go to the bookstore, and it was in the bookstore in those days, the first Market Wizards book, and it looked kind of cool. Hey, Wizard, and I never heard of any of these guys. Paul Tudor Jones. I never knew who these people were, right? But I read it, and I read it again, and I read it again, and I read it again. And it took me 10 years before I believed it and followed the rules. Okay. So, and it's one thing to know the rules, and it's another thing to have discipline to follow the rules. Discipline. We were talking today on my Discord, actually. Long-term discipline is extremely difficult. You know what I mean? I've had 2 trades this entire year, right? I went 3 months having 0 trades in my process, which is the only thing I will trade. I've never had that before. This was a whole new discipline for me. All right. I went back and I looked. In 24 years of trading my process, I had been out of the market for a total of 2 months, not 2 months straight. I'm talking about 2 days here, 2 days here, 2 days here, a total of 2 months in 24 years. Now, all of a sudden, for 3 months, I'm totally out of the market. Think about how hard that discipline is. I'm a money manager. People pay me to manage their money, and I'm not putting on any trades. You know what I mean? And I don't get paid, by the way, unless I make money. So I'm not making any money either, right? It's a very hard discipline to do. But I get to look back now, okay, 3 months later, and say, hey, what am I supposed to be doing? I'm supposed to be offering people negative correlation to things like trend following. Well, this has been the best 3-month freaking period for trend following that we've almost ever seen. I see some of these trend follows up 30, 40% year to date. I'm flat. So if you think about it, that's a home run, man. If I can be flat when trend following is up 40% and my job is to be negatively correlated to trend following, truthfully, it's a home run. And my clients, okay, they love it, right? But even knowing all that, you think it's not hard for me to just sit here and not put any trades, man, and just watch this shit day after day? It's extremely difficult, man. But this has been a whole new thing for me. I thought I had seen it all at this point, and now I get a whole new thing. Now, like I say, fortunately, it ended up being the right thing. But if I wasn't disciplined and I just did shit, right? Hey, fuck this shit. I'm going to short the stock market to be contrarian and all that, I'd be a hell of a lot more pissed than I am that I get no trades, So, you can know the rules, but the discipline part is extremely hard, just like anything else, right? You could know if you want to be the best basketball player in the world that you got to go out every morning before school, wake up at 6 a.m. and go practice dribbling and shooting for 3 hours. You can know that, but do you have the discipline to actually do it? There's a discipline that's difficult too.
No, I love that. So, Andrew, you got to get going here. So I think Jason we're over an hour now.
Yeah, sorry, I ramble sometimes.
No, dude, I'd listen to. We could be on here all day. I'd listen to this all day. This is for me. This is like therapy, like talking to somebody else.
For me too. That's the thing. For me too.
Yeah.
People don't get it. I sometimes I write things in my newsletter, which my newsletter really was just my weekend notes to myself that I've been doing for 20 years, and that's what
Same.
my newsletter. Yeah. So there's things on there. Sometimes I get into like the whole psychology of myself and all this stuff, and it gets a little dark sometimes. You know what I mean? But I'm like, look, this is what you got to do, man. I'm exploring my own weaknesses and my own psychology, so I don't fall victim to them. So
it's important to be able to.
It's all therapy to me too, which we all need. God knows.
Yeah.
If this is what we're doing for a living, then we all need therapy. So.
Absolutely. All right, guys. Well, Jason, where can they find you? Where can people find you? I know you have a letter. I know you have the now it's up on the thing.
Good. That's the Twitter because I can never get that right. There's the Twitter.
Yeah.
Also on YouTube, if you do Crowded Market Report, I do videos every week. So there's got to be 200 videos on there. It's all free. Talks mostly about things like risk management and stuff like that. Sometimes I'll do some market talk, but don't be looking to me to be the guy that's going to tell you what to do in the market because I have no freaking idea other than cut your loss and raise your gain. But you can check out those videos. Some of them tend to be helpful. And if you want to take it to the next level, we have crowdedmarketreport.com, which has a newsletter every week. It has a Discord, and we do twice a week. We do full-on conversations with everybody on, whatever, question and answer for an hour or two. And there's a bunch of stuff on there too. If you kind of like what I'm saying, I would check out the videos and see if what I'm saying makes any sense to you and you think it can help you. We've kept the price, I think, very affordable. So, check it out.
All right. Thanks so much for coming on, Jason. Andrew, where can people find you?
Oh, thank you, Jason, for asking. BetterSystemTrader.com. And look it up on YouTube as well. There's loads of videos and interviews there. And I had Mr. Shapiro as well as a guest on, it was a few years ago now, I think, wasn't it, Jason? Way back, but that was a great
I got to be
discussion.
honest with you, man. I've done so many freaking, I can't even remember anymore. I never knew that this was going to be a part of my life, and I don't organize them. And my guy just tells me, "Hey, man, you got an interview tomorrow at 11 o'clock." Okay, you know what I mean. I love talking about this stuff. So I talk to anybody. You know what I mean. You want to talk about it with me? Let's go, man. I love it. So But I guess we did one, and I'm sure it was fun.
Yeah, it was. Yeah. And how about Against All Odds Research? Where can we find you, Jason?
Yep. So that's my Twitter and AAO Research at AAO Research on everything: YouTube, Twitter, Instagram, TikTok, even though I really don't have much on there. But definitely follow me just about everywhere. And we have a Substack channel, so I post all my trades that I do on there, and so you guys keep up with what I'm doing. All right, guys. Well, thanks so much, Jason. This has been a blast as always.
Thank you.
Good hanging with you guys. Let's do it again.
Absolutely. You take it easy.
All right, man.
All right.